If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out, in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show. All right, everybody. Good morning. Welcome back to another live stream. As you saw in the opener there, if you're looking to trade FX in the US, take advantage of our discounts that are going on, or not our discounts, our welcome bonuses that are going on with Oanda right now. If you are a US Forex trader, I've used them for years and been very happy working with them for that time. With that said, we got some movement here this morning. Gold is actually moving lower. I know it's a rare occurrence these days. S&P 500 kind of flat here this morning. NASDAQ just slightly red. The Russell's holding up okay. The Dow Jones is still looking really strong here. German DAX breaking out here. We've got some indices on the move here. In fact, we got to mark this as demand now. We've got big breakouts happening over in Germany here today. The FTSE also looks real strong, really interesting there, possibly just off of the weakness from the British pound, possibly signaling further rate cuts. We were talking about this a little bit in the group yesterday. I don't know if you guys saw this, but for the UK economic heat map, it's a pretty rough story here in terms of our overall metrics. Specifically, what I'm talking about is that pretty much all of our metrics here that Edgefinder tracks for the UK, specifically the British pound, obviously, are signaling bearishness. Specifically, we take a look at things like GDP numbers. We'll read this together. The latest figures came in at minus 0.1%. That is lower than forecast by a 0.2% factor. If we take a look at manufacturing PMIs, services PMIs, what you'll see here is this consistent theme of economic data, the actual data coming in less than forecasts. And we also see that in CPI, right? Cooler inflation. So this combination paints a picture in which the Bank of England will probably feel further push to cut interest rates. So when we take a look at the British pound, you can see that against the dollar, it's holding up okay because the dollar has also been weak. But look at this pair that I've got, which is one that I really like to the short side, pound Aussie. Actually, did we tag? I think we did hit take profit on this. I need to check this on my brokerage, but we came very close. Obviously, very, very close. But pound Aussie has been a pretty easy short setup for me. Basically, we came back up into this resistance point. Edgefinder had a bearish reading comparing the two economies. Sweet. Hit take profit. Very nice. That happened while I was sleeping. That's the best when that happens, right? When you hit take profit while you sleep. Yeah, it was a bed by 11, 12. So not too bad. Anyways, yeah, I haven't even looked at all my portfolios today. So that's awesome. Nice little morning surprise. But yeah, pound has just looked weak here across the board. We've been following the macro on this for a while. The British pound has just been lackluster here. What we can see is just our heat map giving us pretty much the clear signal that economic data has been underperforming in the UK. That's probably going to lead to more rate cuts in the UK. When we compare that to Australia, though, right, Australia has a decent score. You can see that unemployment rate came in better than expected. We had the CPI statistic come in. This also was a little bit soft for the Australian dollar, but then you had retail sales came in better than expected. Services PMIs stronger than expected. Manufacturing PMIs were weaker, and GDP was weaker. But you compare that story where you have some mixed bag stuff to that of the UK's, where you just have a round of data that has been underperforming expectations. And that paints a picture in which the path of least resistance is to the downside. So with pound Aussie, taking profits on this one, if we do get a retracement, perhaps I will play this one again, depending on what the macro looks like at that time. But I do really still like the downside potential for UK pairs. Let's take a look just while we're on the subject and see if we can isolate just GBP pairs, see if there's anything else that's popped up currently. So pound to Aussie is the only remaining bearish currency pair here, but we also have pound yen getting kind of close. And let's see, pound Swiss actually getting close to a bullish reading. So really just going to probably keep playing pound Aussie. If it gives me a bounce here, we can get maybe back into some short setups. That might be something I look to do. Pound yen to the short side is an interesting play. If we take a look at pound yen, I don't like the idea of shorting that chart, but if you were to see this thing roll over, then perhaps we could take a closer look at it. Hey, bro, I just asked for YouTube channels for Forex news from Google AI, and first channel was yours. That's awesome. That's awesome. Nick, if gold closes 44.50, I'm going full port. Well, Godspeed to you. I'd never think it's the right move to go full port on anything because we never know with certainty what markets are going to do. But you do you, my friend. I can't stop you. I'm not your dad. But from personal experience, it's almost like every time the one that you go full port on or you leverage up massively on, that one never works, right? I don't know what it is. It's market magic. It's teaching you a lesson. It's like, oh, you want to go big on this trade? Boom, that one's going wrong. Happy New Year to you as well. Thank you, Paul. Appreciate you. Yeah, so let's take a look at gold here. So gold, a little bit of a pullback here this morning. If we take a look at the 1 hour time frame, you can see a little bit more clear. Price coming down. You've got a little bit of a consolidation zone. If you're watching the 1 hour, watch this level here. We are currently sitting at a pretty significant level of support, this region. If you find buyers here, I would not be surprised. Like I'll say this, I think that ADP numbers came in a little bit soft this morning. I wouldn't be surprised if gold just kind of bounces from here. If you do, for the sellers, for the day traders out there, for the bears, strong close below could be something to work with, but I am not one of you. I am definitely more in the bull camp when it comes to gold. If we reset the Edge Finder's overall view, you can see gold is getting a really strong reading overall within Edge Finder. So I am going to stay with the trade that I'm currently in. I am long gold with a stop loss on the daily time frame, still below this previous swing low. So this is truly a swing trade, right? It's not I'm not looking for, although this has been a great move, I'm definitely looking for a much bigger one in terms of my analysis, my bias. I'm looking for, let's see if we can break through these highs and keep going, right? That's the thing is when it comes to trading, there's all different styles. Like some people like to be more base hit type traders. Like some people love the idea of just, I'm going to take gold here, I'm going to catch a pop, and then I'm going to take profits, right? Or they catch a pop back to the highs and they say, all right, you guys got it from there, figure it out up here, I'm just going to take profits. Other traders like myself are more fans of, I want to catch the big one. And, there's pros and cons to everything. When you try to catch the big one, you have a lot of heartbreak fakeaways. What I mean by that is, let's just say that I go long gold here and I'm looking for the quote unquote big one. I'm looking for the breakout. I'm looking for that kind of next leg higher in this story that we've been seeing playing out in gold over the last few years. If I am taking that trade, if I'm looking for that move, what do I have to accept? Well, I have to accept that there's an increased probability that this could happen too. And that would stink, but it's part of the tuition that I pay. It's the entry ticket. If you're going to capture these type moves sometimes, guess what? You have to hold on loose enough that you could have this type of move. Like if I'm going to try and catch, the move in yellow, right? There's a couple variations to how this thing could play out. Obviously, if I want to capture the big upside move that may happen, it may not happen, but it may happen. If I want to catch it, I have to risk the red scenario, right? Or the pink scenario. So pick your poison as a trader. What I mean by that is nothing works perfect. Everything has a pro and a con. If you're a base hit trader, actually, let me ask you guys, if you are a base hit trader, give me a 1 in the chat. And if you are more of a home run trader, give me a 2 in the chat. So if you're the home run trader, give me a 2. If you're a base hit type trader, give me a 1. I'm just curious. There's not a right answer, by the way. There's no trick question. There's no, in my view, there's not a holy grail or right or wrong way to trade. Some traders do excellent with base hits. Guess what you get with a base hit strategy? Higher win rates. You get to profit more often. When you go for the home runs, they're amazing when they work, but you accept a lower win rate. So if you have like a 4-to-1 risk to reward, or you use trailing stops, or you have a 3-to-1 risk to reward, gosh, even a 2-to-1 reward to risk. I'm saying that backwards. Reward versus risk. Reward, like if you are that type of trader, you know very well the frustrations of this style of trading, which is you have something where you're at 1-to-1 and then the trade goes back and hits your loss, or you're up 1.5 versus 1, like your trade has moved 1.5 times your risk in your favor, and then it comes all the way back, right? And some traders will choose to move to break even. You have so many different choices. I personally don't like to move to break even. I like to let the trade play out until it proves me right or wrong. I use trailing stops, which is kind of the ultimate going for home run type trading, and it has its drawbacks and it has its advantages. It's nice to see we have a good spread of different types of traders. It seems like we have more base hit traders, which, to be honest, is I think for a lot of people preferable. A lot of people prefer, they're like, okay, I may not catch the massive runner a couple times per year, but I'll be catching winners way more often, right? I have no idea which is what. Yeah, so basically, if you're a base hit trader, let's say you're going for like 1-to-1 risk to reward, or even you have a negative risk to reward, you're risking 1 to make 0.75. Some traders do this. And some people actually make fun of people who do this. Like they make fun of people who risk 1 to make 0.75. If you make fun of this by itself, you haven't fully yet become a knowledgeable enough trader, because this can win a lot of money over time. I don't personally trade this way, but you don't know the win rate. You can't judge someone's risk to reward ratio and come to the conclusion, just like you can't judge the win percentage of someone and come to the conclusion. You have to understand the only way to judge someone's trading system is if you have both the reward to risk ratio and their win percentage. Because if this person's winning 80% of their trades, guess what? They're making a ton of money. Or at least not necessarily a ton of money. They're making consistent, good returns, right? Understand that in trading land, I kind of fall in the norm of letting your winners run, cutting losers quick. It's what's worked for me. It's what's comfortable. It's what I prefer. But it comes with low win rates, and it stinks sometimes. It stinks to get stopped out 7 times in a row before you catch a runner. It's not fun, right? At the end of the day, find something that works for you. Find something that works for you. Some traders are base hit traders. Some traders are let your winner run type traders. Some traders are mean reversion traders. There are all sorts of different types out there. So find something that works for you. By the way, real quick plug, and then we're going to bring in Chris Pulver to the conversation. I'm excited to hear what he has to say with us. If you're not in our Telegram channel, take 2 seconds out of your day and ensure that you join us. There is some free value running in there. We are sharing trade ideas, updates. Alan from our research team is posting daily updates on what is going on, what is moving markets. Take a look at this stuff. Like, I would have loved in my early days of trading to have been able to find a Telegram channel that just breaks it down as it is. So for example, what's happening with the dollar index today, both from a technical and fundamental perspective. Alan puts time into the group every single day. He's on our team. He dedicates time out of his day every day to put out educational resources to traders looking to improve their macro and technical trading. I'm also in there sharing my ideas and things that I'm watching in markets. You can see I was talking about the pound yesterday. We had a US oil video clip that I thought was really important that we got dropped in there. Gold trade updates, things like that. If you're not in there, take a second, join us in the Telegram channel. It's free to join. There's also a QR code below my camera if that is easier. And now what we'll do here is we'll bring in Chris Pulver to the conversation. Him and I will take a look at some markets together, see what's going on as we turn the calendar year into 2026. You've got a new year starting, and at least so far, we've got some interesting changes. So we'll see Chris in just a second here. Say hello to him. Hey, Chris, what's up, man?
Good morning.
Good morning. How are you?
2026. Is this the first session I've done with you? 2026.
I think it is. Yeah. Happy New Year to you. Chris, how's 2026 starting for you? What do you have your eye on this year? I've heard all sorts of different thoughts on markets going into this year. I feel that it actually is kind of interesting. You have all the Wall Street people kind of pointing towards another big winning year. This is the fourth year into a stock market rally year, and at least from my side, I think, I can't speak for you, but I think you're in the same camp of thinking, okay, we've had really good returns the last 3 years in a row. Maybe we can dial it back. Maybe we can broaden out. Maybe we can look at other areas and be a little bit more creative rather than just buying the whole thing and watching it going up 20%. What do you think?
Right. Screen that I have right here, this is an interesting portrayal of where we're at with price to earnings. So we have like 25 times earnings in the S&P. If we're going to continue to see that multiple or potentially higher, then we're talking 7,000 plus. I think that, this is what the market expects. The one thing that makes me nervous is that everybody's bullish. Bloomberg survey came out, 21 different shops. Everyone's bullish with anticipation of about a 9% average return. That being said, earnings has to be pretty perfect all year. And I do think that, Mag 7 type stocks can deliver on it. I do think there is a legitimate rotation. We saw this yesterday with the RSP. So far for the year has been outperforming. We just barely poked all-time highs with the SPX yesterday. But this little run over the last, let's say 3 days, low to high, got about a 3.1% run to the upside in RSP. And the last 3 days on SPX, 3.11 compared to a 1.82. So that, it's a percent, it's 1.3% higher. But that's not nothing compared to, I think this is good to show market breadth continues to look better. I just had a chart alarm go off yesterday where the S&P above the 50-day moving average now moved to 65%. The S&P is actually looking a little bit stronger than the NASDAQ at the moment as far as market breadth goes. So we have a lot of stocks looking better. I do think we're priced to perfection. I just want to throw this out there. This is what I don't like about 2026. The potential risk to the downside, whether it's geopolitically, whether it's earnings compression, whether it's the Fed, pivots into, sticky inflation, higher inflation. I think we're going to, like, all this stuff that we're like uncertain about will eventually come to light and the market's going to have to price it in. If inflation is going to continue to be trending lower, then I think we melt up higher. If inflation climbs to, let's say, new highs in CPI, or if you're watching Trueflation, if I see trends to the upside, I think that even though the Fed will essentially be stacked in Trump's favor, I still think the Fed is going to have to focus on inflation. And if we have, a struggling labor market and we have higher inflation, the Fed won't cut as much as they think. The market's expecting 2 cuts this year. So there's like, all it takes is one nasty catalyst to then let this market drop a lot. And we don't necessarily get right to the averages, like 17, 18 earnings or PE on average. We don't just get there and then stop. Like, we will compress to probably 14 or 15, which means we overshoot to the downside. And it's like, I just think we have a lot of tail risk again. It's just a big question mark. So
I've got
a lot of cash, dude, on the sidelines, just kind of hanging out, wait for better opportunities.
Okay. Yeah. No, I like that. Chris, I want to show you two charts really quick.
Yep.
And the viewers, of course, you guys matter. So taking a look here at some historical PE ratios, I thought that this is the best way I've heard it so far. Why can't we have another 25%? Well, we could, right? There's the possibility, but why is a huge another up year in the stock market maybe a bit less likely? Well, it's because a lot of the gains that we have seen in the stock market, obviously it trades primarily longer term off of the earnings of the underlying stocks within the index, right? So for listeners who are maybe not, super stock savvy, stocks are valued on a couple main key metrics: their earnings, their growth, but they're also forward looking, where they're kind of pricing today how much these companies are earning relative to what they could potentially be earning in the future. And then there's a bit of speculation in there, because you're saying, well, we think earnings are going to grow by XYZ% for these companies. We think the stock market's going to have this type of growth. Well, the earnings growth, or the PE ratio, the price versus the earnings of the underlying economy or the underlying stock market, in recent years has ballooned from the 2022 lows. So in 2022, the stock market had a big sell-off, right? And it caused valuations on companies, people to pay less for earnings. They were like, I don't know, earnings might not be so good in the next few years. So people sold stocks, they brought down their expectations. But in recent years, what we can see here is sentiment is sort of baked into these very high valuations, where stocks are valued very high. Now, that doesn't mean that they have to come down. But what it does tell you is that a lot of the gains in the stock market came from people kind of getting euphoric, getting excited, speculating essentially that stock earnings were going to be massive. And so what I see personally is we're in the 90th percentile. We are at very, very stretched high level valuations. Doesn't mean that the market has to come down, but remember, a lot of the upward gains, we get these 20% years in the stock market, it's coming from expanding valuations, people willing to pay more for stocks, earning, similar things or less things than the year before, et cetera. The point is, we also take a look at this stat, and I've been showing you some of these charts. This is our new scenario backtest tool. When we take a look at the stock market's forward-looking returns, meaning looking forward after a certain scenario, we get an interesting picture where you have years that are very negative, producing very nice forward-looking returns. I sent you the screenshot in our messages on Discord, Chris. Take a look at the last 12 months when you have down 15%. You're looking at very good 12-month out forward-looking returns on historical basis on average. Doesn't guarantee anything, but it gives you an average. Well, when you have over 15%, like we did in the last year, oh, and by the way, we had 20% before that, and 20% before that. This statistic hasn't been perfect because obviously we've continued to have the run in the stock market. But over the long stretch, what we generally see is that when the stock market is up over the last 12 months by 15% or more, you typically see a 12-month forward-looking return of around 7.39%. Now, the reason that that's important to note is that 7.39% is less than the long-term historical average that the S&P 500 has been able to produce over the last 100 years or whatever, around 10%. So what we're seeing here is not necessarily a reason to sell the market, but to temper your expectations, as the 12-month forward-looking returns are lackluster given the historical scenario of an up move. That's part of the reason why I'm a little cautious on stocks, not bearish on them, but high valuations. We've been on a good streak. That's typically a time where you see everybody's kind of in the camp of thinking the market can keep going. And so forward-looking returns may be a little lackluster at the index level.
Yeah, I think that the challenge of 2026 would be if the market just continues to grind higher. I mean, we're trading, we just poked all-time highs yesterday. 69.45 was a previous all-time high, and I think yesterday the high was like 48 as the day was kind of unfolding. I had a couple of decent trades running yesterday to grab some profit around that 68.50 level. But 7,000 is right within a tiny little putt on the golf course. It's right there. I mean, I think that we have some levels showing it could be hit. 69.60, 69.85, 7,000 is a round number. That was at the end of the year. That was a big JP Morgan pin price was 7,000. So I mean, the nice part was we mostly had a bit of a holiday rally. I wouldn't say that Santa necessarily showed up because we had a 1.7% drop at the last little bit of the year going into New Year's. But here we are, like, higher highs and higher lows. I think that technically speaking, something to watch just in the near term would be, let me change the color here, would be watching this type of move for, maybe like a rising wedge type look, because the market can just grind. Everyone could be like lulled to complacency of all-time highs. Our rising wedge is kind of a perfect pattern for a correction, but not a big correction. So I think a rising wedge would get us back to those 2 fateful days that we saw last year, October 10th, November 20th. Let's say we grind up here a little bit higher, Nick, and then we roll over. So if we roll over and we start breaking lows, we come back down quickly to like maybe 6,500. That comes back into this pocket of support with moving averages. If we bottom out here, then we just kind of grind back up. So if there is any correction, that's right now how I'm anticipating playing it out. If it gets worse, buckle up for a lot of volatility. But something tells me that right now, with like the first half of the year, there's big tax breaks for everyone in the first, let's say 4 or 5 months of the year. There is added liquidity coming to the system. The one thing I just keep reading about is the overnight financing, and I believe this has to continue to come down. If we're going to have ample liquidity in the system, I believe the SOFR rate, this is the overnight financing with the Fed and central banks, I think this has to continue to fall down in order for there to be ample reserves and liquidity in the system. So more than likely, the Fed right now, I think, is doing $40 billion a month in purchases. I think it has to go up, and it probably will. But I mean, this is like mild QE, and all of a sudden, if that overnight repo is what they're calling it now, they're not calling it QE anymore. But if it goes up to, let's say, 80 billion or 100 billion, then let's see if the SOFR rate drops. That would increase the supplies or the reserves in the system. And that's probably going to lead to assets going higher. But if this is struggling a little bit, we might just deal with some volatility. I think that rising wedge would be a decent way to play corrections. Just point out a couple of key levels. That 6,500, 6,550 zone, and then the 6,150 if we overshoot a little bit. I think that would be your strong bullish case this year to, you said 7 to 8% is the 12-month looking. That could be very easy because we pretty much started the year at the highs. So let's say we drop, 5-6% or maybe even double digits, and then we climb back to these highs. I mean, there's probably your single-digit gains, but we're going to finish, around those levels. And I could be wrong, and we could blow through 7,000. And you and I are talking, by October, November this year, we're trading at 7,500. So sure. I'm still leaning to the upside this year. It's just, it was a good year in 2025. I recognize that we're at these crazy high valuations that, can keep going up. I know they can. It certainly pays a lot better to be a bull than it does a bear. My bearish trades right now, I don't know if I posted this for you. I didn't make this an official alert or anything for me, but I have a 35 to 1 hedge that goes basically from 6,000 down to 5,000. And this trade cost me about $560 to make about 30 grand.
Wow.
So it's there as insurance if I need it. It's very cost effective. Now, keep in mind, I took several trades like this last year. I got paid on 2 of them, and that would have been during this window. And then all the other trades that were similar to this, I wasted, let's say,
sure,
$1,000 or $1,500,
sure,
because I didn't need it. But that's also a good thing because the rest of the portfolio was up. So this is insurance. It pays well if I need it. I also am looking to kind of put in a trap where if price does fall to that window, that would pin a 20% area for me, which you would probably guess this. If the market is down 20%, we're probably not going to stay there. We'd be down 20%, rally back up. We go down 20%. Maybe it gets worse, but most likely,
seems like the norm in this market, right?
20% that's like the new drawdown, man.
Yeah. Chris, let's take a look really quick on my side. If we could just take a look at some sentiment really quick. And then I want to talk with you just a little bit about commodities with the whole Venezuela stuff. Here's a look at the put call ratio for NASDAQ. We're sitting kind of in neutral camp. Take a look at the S&P 500. Big, huge spike in the put call ratio right at the end of the year. A lot of people seemingly bought some puts there, but pretty neutral here, at least on that side. Just an updated look at the AAII. You can see a little bit more bullish going into the new year here, positioning up to 42%. I did some, I won't show it now, but I did some interesting studies on the AAII, forward-looking returns as well. As you might expect, the higher this number gets, the less attractive the forward-looking returns get, and the lower, and sorry, the higher that the bearish percentage gets, the better the forward-looking returns of the stock market. Very, very obvious, but it's nice to see it in the data, right? So basically, when everybody gets bearish, there's a nice forward-looking return. When everyone looks bullish, there's historically an average poorer-looking return. So kind of as exactly as you would expect, some contrarian sentiment on that side. And then the other thing I wanted to ask you about, Chris, is we have commodities making some interesting moves. Gold, silver, and oil all kind of making some interesting moves. Copper as well. What are your thoughts? Are you trading, or are you watching the commodities market here? What are your thoughts on this precious metals move we've been seeing here?
Same narrative as last year. It's like gold and silver to me are strong allocations in the portfolio. Be prepared for a lot of volatility. I don't think silver's boom is done. One average I want you to bring your attention to would be gold silver ratio. Oops, I'm going to go gold silver. So we're down to 57 right now. Timing wise, if we ever get to like 45 or 40 is a good time to look at gold to outperform. Silver is still just a monster. What keeps me patient right now? It is this 200-day moving average on gold. We have 500 plus. I think we're at like 570 now, 580. I'm losing track, but I know that we're creeping up towards 600. So this is 572 bars, 73 bars. The last time we had a run like that was 2009, 2011. We hit 600 bars. We dropped 20%. So right now we're still trading, Nick, from these recent highs, even current price. If we drop to the 200-day moving average, that's a 16.5% correction in gold. Now, granted, these are moving averages. They will go up in price as gold goes higher as well. But I think we should see some, at the very least, consolidation, possibly. And this is what makes me nervous too. It's like, okay, let's say that gold has a quick correction of 16% or 17%, finds that 200-day moving average. I will be the first one to say, like, I actually want to buy it. I'm gonna buy it. It's not all in at that 200-day moving average, but I will certainly have a couple levels in there. And I think that big picture, yeah, gold is great, and so is silver. I don't love that they raised the futures margin rate by like 45% in the last 3 weeks. I think that was to shake out some of the loose hands, but it is going to massive institutions that are net long silver. JP Morgan, Citigroup are taking physical delivery. They're basically fleecing the European banks right now to take on physical delivery of silver. We've got large institutions that are net long. I think that's big money that is, that's been kind of trading under the radar, but this trade experienced a lot of mania last year and a lot of hype. So I think you're jumping in and chasing this stuff with leverage quickly got shaken out because, I think they increased margin by like 45%. So I still like the trade a lot. It's just be patient, man. I think there's going to be some pullbacks.
I agree with you. I think, you've got some mania trading going on. I have a bit of a different style in terms of I love the momentum. So I'm in there trading this. I've got stops in place in case, you get, some kind of sharp correction. Here's a question for you, and then I'll answer it too. In terms of gold and silver, let's say you had to hold one thing for 6 months out. You can either buy or short gold or silver, but you got to hold it for 6 months. Which one are you choosing?
If I had to buy
or hold? Yep.
Oh, I'm not going to short either one. Okay. I'm not going to short either one, but I will buy and hold. Long term, I'm going to hold gold. I think gold's going to be ultimately it's going to go back to gold. Like if silver outperforms, that's great, but silver is going to convert to gold. Like people that have tons of gains in silver will just probably throw in gold, honestly. So I think the gold is ultimately where this thing's going to go as far as store value. The debasement trade, like this narrative will probably be alive and well this year as well. Silver's been a great run. I think you get the crazy good outperformance, but I think ultimately those profits need to find their way into gold.
Yeah, and you mentioned the gold silver ratio. I just wanted to point out this too. I think if I had to hold 6 months, I would choose long gold over long silver personally for the same reason. I think that with gold and silver, Chris. It's a really simple, eerie chart, but I want to show it here on the stream. So, well, first I'll show you this chart. Obviously, gold, silver. I just did a regression line. You can see, I think that this recent shoot lower for years, Chris, you and I have been like, yeah, silver might be the better bang for your buck. And turned out to be the case. But now looking forward, we always have to be kind of asking, well, what next? Personally, I think that gold is the better bet over a longer stretch of time as well. I think it's getting cheaper relative to silver, not in terms of an all-time historical basis. Is it cheap versus silver? But I still think that gold is the, over the longer stretch of time, the one that I feel a little bit more comfortable holding. Silver is more of an industrial metal, can get destroyed in a down market too. We've talked about that before. The drawdowns in both silver and gold can be pretty nasty when they do decide to drop. But the other thing I wanted to show you here, what was I going to go to? Shoot, I forgot what I was going to show you, but it was something to do with precious metals, and it was going to be really good. So just pretend you heard me say it.
Sounds great, Nick.
Yeah. Okay. What else? What about oil, Chris? This whole situation with Venezuela. Does that? Do you think oil can continue to move lower? Do you think? I've heard some interesting takes on this, which is like the Venezuelan oil stuff is even if it's overtaken by the U.S. Still is years away from mass supply into the market. I've heard that kind of floating around, that idea, meaning that the downside pressure is not necessarily immediate on oil. What are your thoughts on all that?
Well, we talked about this last year. I mean, it's a pretty key technical level that if we just break 55, we're probably drifting lower. I mean, there's a lot of natural resources in Venezuela. I think there's a strategic foothold into it. I don't know. I mean, I didn't follow the Venezuela situation closely as far as like, I didn't think that we would take action, which we did. I mean, oil is not really made a huge move, but because of, I think they're coming back online with like anywhere between 1 to 3 million barrels per day. If there's excess supply, then we probably break lows and we leak lower. But, oil is something that's heavily manipulated in supply and demand. If we are going to see lower oil because of ample supply, then we technically see a high, low, lower, high, lower, low. Oil gets into the, maybe low 40s. But I think from there, you buy oil. I'm not necessarily saying this is bullish now. I'm not bullish on oil at all, actually. I think that if we break the 55 handle, be prepared for oil to dip into the low 40s. It's going to get very noisy on like the conflict front. If all of a sudden we're seeing oil in the low 40s, it's like nobody wants oil to be that low. It's good for inflation. It's good for very few. I mean, maybe Saudi Arabia, maybe the U.S. can operate at those margins, but it'd be paper thin margins. But I think if we can get down to those levels, oil becomes a great play for the next maybe 2, 3, 5 years by just like being long oil at like the $40 handle. So right now, if we break 55, I think oil slides to, mid 40s, low 40s, and we just be patient. I'm not going to short oil. I'm just going to wait. If it comes down to the levels I'm talking about, technically at 40, I'll buy oil, but I'm going to wait.
Yeah, fair enough. Yeah, I think I've heard before that like Saudi Arabia, they like oil prices in like the 80s, right? 70s to 80s. Yeah. They don't want it too high because they know it
really high for us.
Yeah. So they're they're like, okay, well, hey, our profit margins are much less and would get, like you said, even tighter if oil prices continue to drop. Think about this. If you're Saudi Arabia and you're out there trying to sell your oil on the global exchange and the price of what you sell is going down, 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 that is not so fun for them. So they're interested in keeping it somewhere between that sweet spot of 70 to 80 is what I've at least read, where they can make nice profit. But if it gets too high, interestingly, they also don't want the price of oil to go too high, because if it goes too high, then it can destroy the demand for their product, right? If oil prices skyrocket, it can lead people into recessions. Recessions are very bad for oil demand. So kind of an interesting business model there that they have over in the Middle East, but makes sense in terms of the product that they sell. Any thoughts on Bitcoin, Chris? So here's my thought on Bitcoin. I just am somebody, I have to have a chart moving up for crypto because I'm just not enough of a hodler to just be buying it down here. But I know that there's people who think differently. There's people who are like, yeah, just allocate to it, buy it on the dips. And this is ultimately where you want to be buying Bitcoin. What are your thoughts on it?
Maybe, but You know, 30% is not nothing. I think that I think the years right now that we have like IBIT and FBTC and all these Bitcoin related ETFs, it no longer has the same kind of decentralized play that it once did. So I'm not saying that it's not equally as enthusiastic about like the bullish side of Bitcoin. I think it's still around the same narrative as the debasement trade. I think gold and silver got a lot more love in that debasement trade that Bitcoin did. We had some liquidity issues last year, which is why we peaked in October and dropped 30%. But you know, 30% of Bitcoin, if you've been in it at all for the last 3, 4, 5 years, 30% is nothing. I mean, so the fact that we did stop, at least stop some of the bleeding around a 36% correction, it doesn't seem that bad. But what this tells me is like, let's say this is a decent bottom here, Nick, and we start climbing back up and we're talking Bitcoin and that maybe the next couple of weeks is back up to 100K.
Yep.
Well, a 30+% drawdown, I would suspect that on the upside, maybe Bitcoin's going to be up 20 to 30% as opposed to 100%. So if let's say we get back to all-time highs, we're looking at maybe like a 40+% correction, right? So we're at 56% if we get back to all-time highs. That's going to feel pretty good as far as an asset, you know, looking for upside. I mean, Bitcoin, I've said this, like we could have a lot of manipulation here at the lows. We could come back and poke these levels with divergence and then look for a bullish pattern. The more this kind of troughs out here, the stronger this case looks like. This either creeps back up to 100K or we go sideways and then test. But I think that if we end up breaking through, you know, 96 to 100, we've had enough time to correct, enough time to bottom that we start looking for higher lows and higher highs. And I mean, I think we get to all-time highs this year at Bitcoin. I think that's a pretty good play. It shook out some loose hands. We obviously have some debt instruments and financial engineering that's going on in Bitcoin that I don't know. MicroStrategy is what I'm trying to basically repair. I have some ownership. I've got a ratio spread that's a 165 by 160. We've taken a couple profits along the way, but this has fallen way further than what I really wanted it to. Outside of, I did measure it. I mean, if you look at I know my charts are ugly here, but high, low, lower high, lower low. You can see this 150 bottom on my chart. That was measured. That's literally just measuring symmetry. So if there's a bottom here, this would be a great time for it to form. But I know that it's not going to be just poke the 150 mark and then go higher. Like it's going to be sometime bottoming out. It's called a big trough in the equities world. But if we have like this big saucer or like the U-shaped bottom, that it might just take time to kind of clear. But if MicroStrategy gets back above 200, it looks better for a correction, maybe back into the 250s, 300s. Just take a swing, look at some Fibonacci levels, and we're probably talking like mid 200s. But I don't want to be in MicroStrategy because it doesn't look like Bitcoin anymore. I want to be in Bitcoin. I want to be in IBIT. I want to be in FBTC. They look exactly like the Bitcoin price. So take a screenshot of Bitcoin, look at IBIT. This spot price to me is much more correlated. So if I'm going to get long Bitcoin, I'd rather participate with actually having like my, cold storage off-grid stuff, and then IBIT is my way to kind of paper trade it with BlackRock.
Right, going off that theme, Chris, we've got 1 minute to go. Last rapid fire quiz for us, really quick on my screen. Take your pick, and audience, feel free to participate if you want to weigh in yourself.
Ooh, love it.
We're talking about some picks for. Let's just, I mean, Chris, you and I are not huge prediction people for the whole year, but let's just do it for fun anyways. Going into 2026, which one are you feeling out of this list? So QQQ versus SPY. What do you think? Which one are you picking?
SPY.
Me too. RSP versus SPY.
To me, it's hard to justify an outperformance of RSP, but I think it's the easier play right now, just because if we do broaden out, RSP should be receiving a lot of love.
Okay.
I'll say RSP because it's like a market broadening.
Okay. Yep. I'm kind of the same camp. And then I just added this one just because of what you said, but you kind of answered it towards the end. Bitcoin versus MSTR, you're going Bitcoin. So far, we're in agreement on these ones. Okay. Next one, gold versus silver. I think we kind of already established
for gold. The year. Well, gold long term, but for the year, I think silver is going to have another like crazy pop. I think silver could go up like another 30-50%. That surprises everybody, and that gets into like the mania of like, holy crap, it's going to go up another 50%, another 100%, and then it just crashes hard.
Okay, we're split on gold versus silver. Crowd, weigh in. Help us determine on that. Gold versus silver. Which one do you think is the better buy for the year? Okay, next one is dollar index. This is kind of a creative one, and you can kind of define it however you want. Dollar index versus the basket, meaning let's say you just bought, let's say long dollar or short DXY, right? You're betting on the euro, the pound, the Aussie, the yen, etc.
I'm going to say the basket. I'll take a weaker dollar. There's room to fall. I think the dollar gets weaker.
Yep, I think I'm kind of in the same camp. And then gold versus TLT.
I'll take gold.
Okay. Yep.
I literally deliberately took all profits off of TLT last year. I'm not interested. I think the one thing I want to avoid is like a Liz Truss bond market moment where it's like if we just have something nasty and volatile in the bond market, the move index, like I just don't want to be in TLT. We've also had a massive bear market for 4 years, and last year, like, hey, congratulations, you pretty much got a yield. Like you got like a 4% yield of bonds, and it was a steady year. A lot of bond fixed income traders are like, we crushed it this year at like 5.5%, 6%. I'm like, okay, I'm glad, but yeah, I don't know, man. It's just one thing away. If we have added liquidity, bonds are just going to look unattractive again.
Yep, I'm with you on it. That's all we got time for, Chris. I know you got to move on to your next show, and I also we're going to be passing the stream over to Alan Perez, taking over the stream. Don't go anywhere, Chris. Thanks for coming on, man, and we'll see you on the next one.
All right, see you. Thanks.
See you guys. Hey, stream viewers, if you're outside of the United States, I have a cool offer I want to tell you guys about thanks to our partnered broker, 8cap. 8cap is currently offering the ability for new depositors to get access to our premium tool, the Edge Finder, completely for free. Now, how this works is basically you create an account and deposit a certain amount of money into that account, and they will essentially buy the Edge Finder on your behalf. So it's a win-win-win. They get a new client for a reputable brokerage, you get access to the Edge Finder and a great brokerage to trade with, and you'll be supporting the show by signing up with 8cap. Now, here are the steps if you want to find out more about this specific offer, but make sure to follow them specifically as we list them out on the screen here. Step 1, navigate to a1trading.com/8cap. That's a1trading.com/8cap. Step 2 is to follow the instructions and to make sure you use the specific link on that screen to sign up for your new 8cap account. Step 3, complete the required deposit amounts and contact their team as instructed on the page. So if you're interested in finding out more about this offer, head over to a1trading.com/8cap, and we'll also be dropping the link to this down below in the live stream chat as we speak. Like I said, make sure to follow those instructions specifically if you'd like to get access to a free copy of the Edge Finder if you meet the deposit requirements as listed on the website. Full information, like I said, can be found a1trading.com/8cap. Now back to the stream.
Good morning, everyone. Hope you guys are doing all right here today. I'm going to start off here with the Edge Finder. Saw something very interesting that I've been noticing here. So actually, the price action on DXY, right? We are trading somewhat a little bit higher. I wouldn't say we're in an uptrend by any means. We're still in an overall downtrend here. But one thing I've noticed here on the Edge Finder, New Zealand, most of these really strong currency pairs like New Zealand, Aussie, they were really up there, very bullish reading at one point. And they're now trading somewhat lower here. So they're starting to fall off. And then you see dollar Swiss here creeping up at a neutral reading. So it's not a bullish reading by any means, but it is starting to creep up here. And then we now have actually euro dollar now getting into that neutral, somewhat bearish territory here, which is really interesting to see. And the reason why I say that, I think right now, most of the currencies are mostly trading off of the US dollar and not so much of their base quote currency type situation. And what I mean by that is this morning we did have some employment data out of the Eurozone here, Germany. German unemployment rate or unemployment change, was better than expected. CPI was pretty flat here. So not much changing. Mostly towards everything is on focus for the end of this week here on Friday. So we did get US ADP employment change, did miss expectations. So we were expecting 50,000, came out at 41,000. DXY is kind of left unchanged, though not much has really happened. So DXY is pretty flat on the day, 0.06% change. The biggest focus definitely, I would say, is that NFP report coming into Friday. That'll definitely influence the Fed's rate path. And we'll be back into the territory of no more of this shutdown blackout period where we're lacking data. And so now we can, most of the trades or most of the institutions are now navigating with a clearer path. So that's the big thing on what I'm watching for. And I think everyone else is watching for too. I did see hints of this whole tariff repayment thing that could happen on Friday as well, the decision. But I think that's more of a secondary thing. I think the bigger thing right now is front focus is the price of oil and the Fed's rate path, in my opinion, at least. Speaking of oil, kind of trading lower. Look at that. So we did kind of tap into this bearish trend line, right? We're now trading lower. If it stays lower, that's going to be really good for the inflation story in the U.S. So perhaps lower oil does kind of give us a weaker dollar, lower inflation, the Fed can cut rates, et cetera, et cetera. How's everyone doing? Ball, hey, it's Alan. Yep, sorry to disappoint you, man. What levels are good to buy gold on 1 hour? I don't trade intraday gold on the lower time frames at all, to be honest with you. Thoughts on New Zealand yen and pound US dollar. So to Nick's point yesterday, pound dollar is getting pretty weak here. If we look at the edge finder, he was looking at let's look at the heat map first. You can see pound dollar has been missing all of its recent data points for the worse. So you're going to see that 0% needle. And what that means is I'll show you guys on a more holistic view when it comes to what this actually means here. Eco surprise meter on the edge finder, right? Basically what this means is what are the countries doing when it comes to their data points, right? So if you get, for example, 5 data points for the US and they all beat expectations, well, that USD meter is going to shift to the right in that blue territory. That means the US dollar is relatively strong in the current present moment. This is a good tool for short-term traders. Now, if you get the opposite end, then pound dollar, for example, gets 5 sets of data points and they all miss expectations, well, that needle is going to start moving to the left into that red camp. And then that's going to be very bad for the pound dollar. And you can see it right here in real time. You can see it happening. So if you just go down to a 4-hour chart, right, you're getting that reflective. We did get this big move. I think it was like, what, 70 pips? Yeah, 80 pips. That big candle here. And it looks like we're kind of just filling that candle in there. But this is a good example of, it's showing they're missing expectations. They continue to do so. If they continue to do so moving forward, then you can definitely expect more of this bearish price action in the pound, perhaps a shift, and that's going to obviously lift the dollar as well, or the other side of the currency pair, which is the dollar. So yeah, that's a good holistic view here for all the major currency pairs. It shows you kind of where they're at here. Another good notable mention would be the Canadian dollar, which was doing really, really well. And if you look up a dollar CAD chart, you will see that as well. So if you pull up dollar CAD here, for a very good amount of time here, dollar CAD was trading lower. Now we're kind of trading back into this level of what I would say resistance. One thing I've had on the back of my mind for some time here, I kind of neglected pound CAD. However, this is a really good point. You see that, 1, 2, 3, 4, 5 times this acted as a good level of resistance here. And if we do see oil staying lower, the inflation story in the US coming down a bit, the Fed is more willing to cut rates, then you will definitely be at a good point to go ahead and short dollar CAD to the downside. This is a really good level of resistance. Personally, what I would be looking for is a little bit more of a bump up higher, just to get a little bit of a better risk reward there. But I think that's a really great setup if the dollar bearishness play is still intact. Also, too, you got to think about it. Let's say we get a surprise in the NFP for this Friday, and no one knows what the outcome is going to be. To be honest, I don't. But let's say that you do go ahead and get some weaker jobs data in the US, then 100% this thing will go ahead and short, and then you will see this level reject here. Weaker jobs in the US will incline the Fed to go ahead and cut rates in order to save the job market, which is going to be good. So there's 2 things on the Fed's mind right now. It's the labor market and inflation in the US. And if you just go ahead and look at the inflation story in the US, I'll pull it up here. Inflation data, CPI, when toggle it to US here, we were elevated at 3%, and now we're trending down somewhat lower. We're now at 2%, still above target. So I think that's the current balancing act that the Fed is kind of just trying to navigate here, is which side of the coin are you going to focus on? And I think right now, the focus is on employment data. So if you do get that, bad miss in NFP, then they're definitely going to continue with that focus, go ahead and cut rates. And perhaps that's the better option, right? Because if we do see this trend continue lower, then they address the right side of the coin or the better side of the coin. Hey, Max, how you doing? DXY to 95. Ball out. One thing I like about you, man, is that you're very consistent. I like that. Someone asked Yen Basket or New Zealand JPY. Let's go ahead and see what that is looking like here. So when I use top setups, I do the major currencies only, but let's go ahead and put on the minors only. Where is New Zealand yen? So just by looking at this, it is a neutral reading, so nothing too crazy to act on. If we just pull up the chart, New Zealand JPY. Trading higher. Now, the big story behind these yen pairs is the intervention, right? So if we just look up let's go ahead and do JXY. This is the Japanese currency index. We're on a weekly time frame here. The yen is very, very weak. And so the Bank of Japan has voiced that they're willing to intervene. They don't tell you when exactly they're going to do so. So it's just a matter of becoming very cautious when price gets to very extreme levels. Excuse me. And I think we're kind of getting there. So historically in the past, when dollar yen gets to 158, 160, it's really when it's 160 territories. 162 would be that for sure level. But when you get up into these levels, then you have a very good chance that the Bank of Japan is going to intervene. Like I said, you don't know exactly when. So I think with a lot of these yen pairs is that you're going to get drifted up here, and then it's just going to have one of these moments where the Bank of Japan intervenes, and then you get a nice flush lower. So very hard to navigate, to answer your question, quite frank. I don't know how I would navigate it. If anything, like stay away until you're like on the right side of the V per se, and you kind of see a very clean, obvious change of structure. One thing I would say, though, the most cost-effective way of doing it is, most of these currency pairs, like for example, pound yen, right? Pound still has higher interest rate versus the yen. It's really hard to kind of participate in a trade like that, especially if you're going to be holding it for a very, very long time, just because of the swap cost that you're going to incur. So I think that the one currency pair when it comes to the yen basket that is on top of everyone's mind, or most people's mind, is going to be that Swiss yen. That's going to be the most cost-effective way of participating in that trade. However, if you look at the Swiss yen chart, it is straight up to the moon. So again, you would need some kind of very, very obvious shift of structure to go ahead and make that trade worthwhile, because technically, yes, you can participate, but there's nothing left to reference. There's no recourse that you can look at or have for that trade. So you would need to see, in my opinion, what I would look for, and I would love to participate if I get the opportunity, would be something like, you have this bullish trend line here, chugging higher. You need a very obvious break below a level like this, and you have to stay below it. You know what I mean? And not only that, not just Swiss yen, but you have to see that price action consistent across the other yen pairs as well, the other yen crosses. So I want to see Aussie yen going lower too, New Zealand yen, pound yen, dollar yen, whatever. I want to see it consistent across all of them, because that means that it's actually the yen that's doing the heavy lifting, or the heavy pulling in this case, to the downside. You don't want to see just like one of them come lower and then the other ones continue to rally up. Then that means it's not the yen doing the work. It's actually the base rate, which is the Swiss in this case. Melissa, there's a couple. So Swiss yen, Swiss yen is one position that I'm looking at, right? Something that I'm very much eyeing. I would love to participate in a trade like this. The thing is, I don't know when it's going to happen, right? So perhaps I turn this into an alarm. So I'll do that. Turn it into alarm, and then if it tags this, then I'll kind of go back to this chart. I really like Aussie dollar to the long side, but it has a lot of relative strength. I mean, we just made a new high relative to where we've been at for the past couple months, right? 14 months or so. So Aussie yen, annoying, because I was in this trade, but then, if I just do a bar replay chart so you can see what I was I'm going to start new. So when we were right here, right, I was in this trade and I said, this is a level of resistance, whatever. I'm going to take my profit. So I went ahead and took my profit at this level. Little did I know it was going to continue higher and higher and higher, which is okay, right? You don't get the whole move, and I didn't expect to anyway. So I'm not saying that I did something wrong there, but the thing is, I want to continue participating because the fundamentals behind it are still very, very good, but it's overextended. I'm going to be trading at a premium if I trade it to the long side. And there's a chance that this thing corrects lower, right? If we get that strong jobs report, NFP numbers on Friday, then the Fed can kind of go ahead and shift a little bit to the inflation, whatever, hold for a tad bit longer, whatever you want to call it, right? Point blank, there's a chance that the dollar does catch a bid, and if it does, then I have some downside, risk that I have to be mindful of. So I don't want to just blindly buy the Aussie dollar just because the fundamentals look good behind it. Technically speaking, you're at a premium. So what I would like to do, Melissa, is I would wait for a pullback of some sort. The Fibonacci retracement levels that I had at one point no longer are valid just because this thing did extend. So if we just updated view here, this is the 38%, 50% retracement level, still at this level of support that I have marked up here. And this is ultimately a good level. So whenever we did, rally break this level of resistance, trade it back into this level. So perhaps this becomes another level of support if we do find ourselves at this point again. And then I would love to trade it to the upside here. So that's just one thing I have to be patient for. If anything, I'm going to do an alert at here, just so if something out of the ordinary happens and we find ourselves there, I will take a buy position. And then just to kind of go over the fundamentals and why, elaborate a little bit here. If you look at the interest rate data let's look at interest rate projections. And then we're just going to highlight only the Aussie and only the US dollar. So this is very interesting. Definitely something that we should all be mindful of. And this is a good trade as far as fundamentals go that you guys can have on the back of your mind. So this is the interest rate projections chart by the Edge Finder. You see that in red, it's going to be US dollar, and in blue is going to be Aussie dollar, right? And at the moment, Q4 2025, Q1 2026, which is where we are right now, the red bar is still higher than the blue bar. So that just means that the interest rate in the US is higher than Australian dollar. Well, going into Q2 2026, we can expect the projections are that narrative, that relationship is going to flip, where Aussie dollar is now yielding more than the US. And so that's a really great thing to see as far as currency strength. Currencies, they trade off of interest rates, right? The backbone of currencies is interest rates. And so money naturally flows into the higher yielding currency. Seeing that the Aussie dollar is going to be yielding more than the US, that path, right? They're kind of just going in opposite directions, that they're going to flip going in from Q1 2026, going into Q2 2026. That is a really good fundamental backdrop for the Aussie dollar. Not to mention, too, let's say this market continues to be overly optimistic, whatever. Metals continue to do really well, which right now, we're still trading at the highs, but like you see silver kind of trading lower here. But regardless, there's still some momentum in metals in risk. Aussie dollar and New Zealand dollar, those two currencies are risk currencies. So if that environment is present, then you will definitely continue to see Aussie dollar trade higher to the upside. So just one thing to mention. Also, guys, the tool that I'm using, I use this tool all the time. It's called the Edge Finder. Definitely go ahead and snatch that. I'll give you a quick story here. So before I went trading independent, I was working at a firm, JP Morgan Chase, and I was very spoiled at that firm because I was getting into my trading journey. I knew at the back of my mind that I wanted to start trading for myself, and so I was learning, right? I was learning by myself, but I was also utilizing all of their research. So like every morning we would have a morning huddle. Every Thursday we will get the bond report, whatever. But I was getting fed a lot of information. And whenever I left the firm to ultimately start trading on my own, all of that, resources that I had went away. So then I was kind of left with doing it on my own. And I did want to do it on my own. as far as pulling the information and gathering it. But it was very time consuming. So I would definitely recommend getting yourself a copy of the Edge Finder. It helps me, if from a time standpoint, it definitely helps you delegate the task, very time consuming task of gathering all the data points and comparing it with everything. Super helpful. And quite honest with you guys, this thing has paid for itself 100-fold. Like literally, like this thing has paid itself over and over and over. So I would definitely recommend getting a copy of this. I think it's one of the best tools out there, guys. And it's relatively cheap. Like seriously, it's actually quite cheap for what it does. Like I think Nick needs to raise the price, but it's really helpful. So definitely take advantage of it. So going into my trade ideas, I would wait for a couple things. I would wait for that pullback in Aussie dollar, and then I would wait for that score on the top setups to kind of go ahead and bump up a little bit here. So I did mention earlier that if we just toggle major currencies before, Aussie dollar was actually having a stronger bullish reading. And I can show you this by looking at the score history here. And you can do this on your own for your own back testing purposes or whatever. But if we just look at Aussie US dollar here, where are you at? There it is. The score, let's see, where are we at? 2025. No, the score was way higher. And so, okay, there it is. Earlier in early December, when that big move was happening, you did see 9 score, right? 8-9 score. That was also the case with New Zealand dollar as well. We've since falling off a little bit. So I would really like to see for that Aussie dollar score to, bump up higher as well. And then I would like to see that current theme with the narrative of US dollar lowering the rates and Aussie dollar continue to hike the rates to still be the case. Then I can go ahead and jump into this trade with full confidence. I think that's going to be like a very no-brainer trade for me, in my opinion, when the time does come, if it does come. So yeah, that's something that's going to be on the back of my mind. So Swiss yen, Aussie dollar long is a big trade for me that I'm looking for. Yeah, so that's going to be that A++ setup right there for me. When the interest rates are in the US are going down and the interest rates in Australia are going up, that's like the perfect scenario, in my opinion. Yeah, all the updates are for free. Yeah, sometimes Nick goes crazy. Like, I don't know what he does behind the scenes, but there was like a time where he just dropped like 3 new things in 1 month. Like this real yield heat map was not there, which I love for longer term picture. Yeah, real yield heat map. Then he did the real yield history. Then he did the scenario back test. So yeah, all the updates are free. So definitely take advantage of it. Alan, I am suffering from scalping. I have to take 5 trades to make something, and I lose when I take 1 trade a day, and it ends up profitable month. Rabies, I need to ask, what assets are you trading? And by the way, too, I've been guilty of this myself. So I've definitely scalped before, or tried to scalp very early on. It's really hard to filter though when you're making so many trades. It's hard to filter what trade was profitable because of the action that you take, and what trade was profitable because of luck. When you kind of take a step back, take a longer term horizon view, you kind of filter that out a little bit. I like swing trading. It's the way to go, in my opinion, just because you're trading less as far as the frequency doesn't mean that you're going to make less money. Sometimes it's like the 3 weeks out of the month, nothing's happening, or I'm in a trade and nothing's happening. And then on week 4, that's when it kind of all snowballs in. So less, just because the concept or the idea of that swing trading is less trades, sometimes it could be way worth your while too. Why does it feel like you're late to the stream today? It's because you don't have notifications on Cycling Club. You got to have them on standby all the time, because you never know when we're going to pop up. One thing I would also mention, guys, if you guys are struggling on trading, or you want to make 2026 a better year for you, first thing I would say is actually put some action behind it. So don't just, you know, consume, and then actually, like, put some action behind what you're doing. But I do my very best to go ahead and put up the two best charts of the day, the moving charts, the relevant things that are happening in the now, just so you guys are aware of it. So definitely join the Telegram channel. It's completely free. This is one of the things where, like, it's truly free value, right? Even if you don't purchase anything or whatever, join the Telegram channel. You will know exactly the two main topics of the day, the two main charts, the two main catalysts that are going on. It's going to keep you informed on the fundamental story. And sometimes there are times when there's a lot of things happening, and so I do post 3 or more a day. So don't think that I'm just holding back. So if there's more that I know would be valuable to everyone, then definitely join. I will do my very best to update you guys. As far as the Telegram goes, here, I dropped the link here. Join it. It's completely free. Take advantage of it. Sincerely, like, I do my very best, and I'm always open to feedback too. So join the Discord too. If you have any feedback, suggestions, something you want to see, or whatever improvements, just hop in the Discord and mention me, and I'll do my best to reply to you guys. But as far as the week goes, so my session is wrapping up here, so I'm gonna kind of pull back here. But DXY, what I'm looking at, I think most of the market is going to be focused on that labor data coming on Friday. If you get strong employment data, then you will see DXY rally, right? If you do get very weak employment data, DXY would most likely fade off of that news. Perhaps this 38.2% retracement level that I have marked up on my chart was that level, that was that pullback that the markets were waiting for, and you see DXY flush lower. Why that is? Well, if you get weak jobs, then that means the Fed is most likely going to cut rates in order to support that weakening job trend. And so you will definitely see that in the price action. If that's the case, then this thing's going to fall off. Aussie dollar will continue chugging higher. This 38.2% retracement level that the euro dollar is at, perhaps that's just the dip right there where buyers step in and take it higher. If that's the case, then you can definitely expect or try to aim for euro dollar back at this recent level, this recent high at the 1.1800. So that's kind of what I'm looking at as far as the very current, very near term trade setups. If you do get that dollar strength off of strong NFP numbers, then I would love to go ahead and fade that strength by going long Aussie dollar. So if we ultimately hit this level, that would be really good for me, something I'm looking at for. Melissa, to your point, that's going to be the very near term trade that I'm going to be eyeing. So that there. Also Swiss yen, but I don't know when that's going to happen. I have that chart alarm that I set up there, but unless you get a very obviously clean shift of structure, then I'll participate. But if not, it's really risky, shorting a chart that's just chugging higher. I really wouldn't do it. If you were to choose one, which would you say is more important? The Fed's urgency party is right now employment or inflation? I would say employment for two reasons. They've voiced it, right? So that they've actively said that their attention is shifted towards the labor, but also too, I'm going to go back to the Edge Finder tab here, and if I go to the inflation data, it seems like the inflation is kind of working itself out already. So we were at 3% and now it's 2.7. So if we get another, trend lower, then perhaps the Fed doesn't have to balance that anymore. Inflation is kind of taking care of itself, trending lower. And then you get, then you can address the jobs market by cutting rates. So that'll be the best case scenario, honestly, right? But then if inflation stays elevated or it prints higher, then you're back in the position of, which one of the two that the Fed's going to target. And then you'll see that, whenever they do their minutes or whatever, when they speak, they might drop into that. But that's it for my segment, guys. We do have Forex James coming on here. You guys are in great hands. I love the guy. He actually just dropped a really good video that I watched, so definitely check him out. But yeah, have a blessed rest of your day. Have a blessed rest of your day. And as always, trade safely. Bye-bye, guys.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Hello. I've just realized I've not shared my screen. Apologies. Let me pull that up for you. There we go. How's everyone doing? Hope you're all well. Happy New Year. It's the first time I am back since 2025. So in terms of markets, there is not too much. I'll be perfectly honest with you. So just to quickly give you a rundown of my current thoughts on G10 currencies. So the US dollar is relatively bearish, but not nearly enough at the moment for me to be involved with. I think Alan touched on the news that we have coming on Friday with the labor data for the US. So I think that will be sort of the deciding moment on whether I actually want to be involved or not. Or if I want to, as again, Alan said, look to possibly fade the move. The euro, I'm completely neutral. The yen, pretty much neutral. I think the fundamentals for the yen actually are slightly bullish. However, the problem is that it's going to remain a funding currency. So even if we do see the yen start to gain some short-term strength, I actually think I would counter trade that and actually start shorting and selling yen. Ian, good to see you, my friend. Hope you're well. Alan, Max, off the main. Good to see you guys. Missed you all. Looking fresh. Thank you very much. My barber almost made me bald. I wasn't too happy about that, but it is what it is. So let's just quickly go back to that. So the sterling, I'm completely neutral as well. My personal bias long term is still bearish, but that's my opinion. Whereas if I'm looking objectively at the data right now, I'm getting pretty much nothing. The Swiss is bearish. I'm going to move on to pound Swiss in a second because I did leave you guys last year telling you that I was in it, and I kind of made a mistake. So I'll explain the mistake shortly. With the Canadian dollar, I'm slightly bearish, but with oil, I'm not really very interested. There's been a lot of talk about the Venezuela and the oil situation. I think that was a lot of social media hype. It's pretty much non-impact data or non-impact news. It's just headlines and people are yapping. Australian dollar, I am neutral right now, purely because of the extension we've seen. However, the Aussie New Zealand, we've already made some bank on. So we booked the profit pretty much in the new year a few days ago on that one, so that was quite nice. For the NOK and SEK, I've got nothing. Gold, silver, still bullish, but again, waiting for some sort of retracements. We'll go over to the chart shortly, and that's pretty much it. Still bullish on US and European equity indice markets as well, so like the NASDAQ, the S&P, etc. So let's have a look. Let's do a little bit of a quiz. This is pound Swiss. I've not touched it. This is exactly as it was when I left you guys last year. So can anyone tell me what the mistake was? What have I done that is a mistake that you shouldn't make? I'm going to give you guys a couple of minutes. It's not a complex thing. I'm not trying to do a got you. This is more of like an educational question. Anyone that really does trade currencies they will be able to tell pretty much instantly what the problem is here. And it's not a price action problem. It's not a P&L problem. It's more of a back-end trade problem. Oh, you book it looks nice. I'm not sure what you mean by that, Max. New Year, James, looking good. I appreciate that, Joshua. I'm sure you look fantastic as well. Do you do currencies? I do currencies. That's my bread and butter. Okay, so with pound Swiss, the problem is swaps. This was a real rookie mistake that I made. And to be honest, this is one of the worst mistakes I've made, not in terms of a big loss or it's anything that actually impacts me or my P&L or anything like that. When I say it's the worst mistake I've made in a little while, I just mean in terms of it's just such a stupid oversight. So basically, the situation is, if we go and have a look at the Edge Finder, bear in mind, this wasn't a surprise. I was fully aware of this, which is why it's even worse. So the Edge Finder's moved around over Christmas. Let me just make sure I can actually find the spreads. Sorry, not the spreads, the swaps. Here we go. Carry trade scanner. That's what I'm looking for. So pound Swiss, you get paid to be buyer. You get paid to be a buyer, and you have to pay to be a seller. However, because the interest rate, or the Swiss National Bank's interest rate, is 0, it becomes a very expensive position to hold. Now, normally this wouldn't be a problem, which is initially why I had the position on. I don't care about paying some swaps. That's just the cost of business. It's just an expense. But the problem is, the real mistake was leaving this position open over Christmas and New Year, because what do I expect to happen over that period? Well, pretty much nothing. So in hindsight, I should have closed the trade and looked to re-enter once we got normalization in the markets, once liquidity came back in, and normalization in the market. I didn't do that. I left the position open. Now, again, it's not a huge deal. It's not a big impact in any way. It's just one of those things where I should have known better. I should have taken some action prior to Christmas to avoid paying those swaps, because I've lost around 0.7%. Just from swaps, and obviously the position itself is in a little bit of drawdown as well. So again, not a huge deal. I think I'm currently, if I closed the trade now, realized the loss as well as the swaps, it'd be about 1.5% down. So yeah, that's, and try and put it in perspective for you. So yeah, rookie mistake to start the year, but it's all right. So let's move forward. What else do we have going? I'm currently in NASDAQ. That's it. So just pound Swiss and NASDAQ. They're the only open trades I've got. I've liquidated everything else. I was short euro dollar. I think last time we spoke as well, I liquidated that for about 3% return, which was really, really good. So I was short. It was really funny, actually, because I was on the stream talking to you guys about this, and someone in the comments said, "Why are you selling strength? Blah, blah, blah." I can't remember exactly what they said, but they were along those lines. I was selling pretty much from here all the way up to here. So I was sat in this, but this is the opposite. I get paid to be a short seller on euro dollar. Euro dollar. So it was good, and then cashed out down here for about 3%. So that was a great position. But other than that, yeah, nothing going on. I'm pretty quiet. Aussie New Zealand buys, yes, the position is still absolutely valid. It's just a case of, in fact, I've not even got the chart open because we liquidated the position. I was looking to move on to other ideas. But yeah, if we look here, on a technical basis, we are extremely overbought. So we've already had a huge run since, when was this? Let me hide that. I didn't realize that was there. So since April last year, this market has just been pretty much rallying to the upside. Now, this is fine, very strong uptrend. However, when you zoom out in Aussie New Zealand and you just look at the overall price action, it becomes a little bit more concerning, because we've just broken above the monthly 200 moving average. We've just broken above all of these highs, or the resistance, if you will. And again, this has been over a decade. Since 2014, Aussie New Zealand has been stuck in this sideways range. So this is just a little bit concerning to me, that we might see some downside, maybe to retest the 200 moving average, maybe a correction back into this zone that we've been stuck in. I don't know. But I'm not wanting to be involved at this price. I think it's a little bit of it's too high to buy, in my opinion. What's the problem exactly? Yes, it was swaps. Yeah. How immediate do changes in central bank interest rates reflect on swaps? Pretty quickly. It's almost immediate, I think. To be honest, that's a good question. I've never actually looked into how long it takes to reflect, but I would assume it's almost immediate. Hey James, do you mind checking New Zealand US dollar? I have a long. It's interesting you say that. I was looking to go long New Zealand US dollar as well. I was looking at the Edge Finder at the start of the week, and I noticed it was a bullish reading on there. However, it seems to have dropped off. Let me double check. So it's still bullish on just macro front, or just the macro front. However, it has dropped off the top setups overall rating. So it seems the sentiment is relatively flat or neutral, but the macro, or the backdrop fundamentally, is still there. So let me just change the layout here. so we can look for some swings. Yeah, so this is pretty much what I was looking at, which was basically trying to find where we could see this pullback come to. So I was expecting something like this, which hasn't happened, which is a bit frustrating because we could potentially have just bought on this 200 moving average. But there's a couple of red flags just on the technical side for me at the moment, which is this impulsive candle. My general perspective on the market is when we have large moves like this, the probability of them getting corrected is very high. Now, obviously, this market has printed that, continued higher. We've had an opportunity to come lower, failed, gone higher, another opportunity and failed again. So there is a part of me that thinks this isn't going to get corrected anytime soon. But it leads me in a position where I'm a little bit uneasy being a buyer. I'm just trying to think as well. Like I said, I've not really looked at this chart since Monday, so I'm just refreshing myself a little bit as I look. Oh yes, that was the other thing. We've just come out of this bearish trend on the H4. Very, very clean trend, very simple. Basically just wait for a pullback towards the 200 and look to short. Very, very straightforward. It's a bread and butter type of trend. We've now broken, which again is a nice sign. We've got the bullish edge finder reading. So in terms of actually getting an entry, I would pretty much remain in the same analysis. I would wait for this 50% retracement and look to be a buyer. That's pretty much all I've got. I'm fairly sure, is the daily still a downtrend? Let's see. Yes, so this is another thing you want to be a bit careful of. The daily is looking a little bit bearish. So what you don't want to do is end up buying New Zealand dollar here. And this is actually just a pullback on a higher time frame, and you actually get caught in the overall downside. I'm not saying that will happen. I'm just saying you need to take into account the higher time frame trends and obviously the possibilities of what could happen. James Gold, 1 hour level. I'm not sure what you mean by that. James, I'm suffering from scalping. I take 5 to 6 trades a day, but ends up in loss. And when I take 1 trade a day, long-term profitable. Well, scalping isn't for most people. To put it very bluntly, and scalping isn't a successful way to trade. Scalping normally should be left to either very experienced traders that really understand capital flows, risk sentiment, market regimes, and how to capitalize on very short-term moves and be able to see them coming. So for example, when I'm scalping, I use a very basic technical setup, which is just waiting for pullbacks to a VWAP. That's pretty much all I do. So, you know, today I shorted gold. I sold here. I sold again here. So I made money on gold by shorting it. But why did I do that? Why would I be selling gold when higher time frame it's ripping? Why would I possibly want to do that? Well, it's because I'm looking at the broad or the context outside of the chart. I'm looking at where is the capital flows going to at that time? What is the dollar doing at that time? What's the current sentiment around that? What's the risk sentiment? Are we risk on, risk off? In this case, we saw capital flows favoring upside on European indices. We saw a risk on sentiment. Gold daily looks a little bit stretched. So it's just a case of, okay, well, I'm going to put all these things together. I'm relatively bearish on gold, so I'm going to go down into a low time frame, the 5 minute, wait for pullback to VWAP, which is fair value, and then I'm going to short. That's it. Whereas most retail scalpers are looking for ridiculous things. They're going to draw a rectangle on a 1 minute time frame and say that I'm going to trade from there. That is useless. So what you also need to recognize is what the lower time frame is, which is majority of the time it's noise. So the way I trade is fully accepting and realizing that I'm trying to get involved with what is essentially noise, which is why I like the VWAP. So on lower time frames, you're going to see a lot of basic just transactions. It's not speculative trading. It's not like you and me sat there saying, I think that gold's going to go up on the 1 minute time frame, so I'm going to buy it. That's not what's driving that market. It's people saying, okay, I have $1 billion. I want to, $1 billion, but I want to buy US equities or US bonds or whatever it may be. So I need to sell the euros, buy dollars. And that's a transaction. It's not a speculative decision. Does that make sense? So again, that's where the VWAP comes in, is because if that is the case, if I'm going to get in that noise, where's that likely to happen? Well, it's likely to happen around the VWAP, which is the best value at that time. So if you are scalping, you really need to understand what you're doing, or you are just going to continue losing. Because scalping, you know, is advertised on social media as go on the 1 minute time frame, mark up an SMT and an order block and wait for a whatever unicorn thing. It's nonsense. It's just one-way ticket to absolute failure. I know it might sound a bit harsh, but I'm just trying to wake you up a little bit. So if you're finding that one trade or less frequent trading is working, then stick to that. There is no need for you to take more trades. So I can take very easily 3 to 5 scalps a day. And some people that might sound ridiculous, but that's just because of the way I do it. And I understand my strategy. I've got my risk parameters. I've got everything I need. And that's what works for me. That probably isn't going to work for you. So you might want to have 1 trade a day. If it doesn't work, you step back and take a break. Silver position is done. Actually, I don't know how I'm going to show you that. Hold on. Just bear with me for a second. Spot silver here. Yeah, so let me open my Notion, which is where I screenshot all of my trades, just so I can show you the exit price, because I'll be honest, the exit silver was phenomenal. It was probably my best trade of 2025, actually. Just give me a second. Let me actually find it. Here, there we go. So on silver, this was the ladder that I was showing you guys, the DCA position. So I was obviously had my buy orders below and above price. I'm not going to explain all of the theory. Then I'm not sure if you guys remember, but there was a period. When did I close this trade? On the 29th of December is when I closed it. So on that date, it was a Sunday night. I remember I closed it as soon as the market opened. Well, pretty much as soon as the market opened. And the reason was, first of all, we had this gap. And second of all, because there was so much talk on social media. There was just constant people talking about silver. And for me, that is a massive signal to run for the hills, take your bags and get out. So I managed to get out of silver at 82.31. So where was that? Let's see, 82.31. Yeah, so I got out here right before we had this big candle that was like a 17% downside. So I managed to catch a 40% move. That's not a 40% gain on my account. That's not what I'm saying. A 40% price move. So yeah, it was a fantastic trade. So I cashed out. My thesis is still there. I'm still very, very bullish on silver. I'm not buying here. That would be ridiculous. I would wait to be potentially back down towards 60 to 55. And yeah, maybe then I might reestablish a position. But until then, it's no man's land, in my opinion. VWAP settings. Yeah, it's a good question, to be honest with you. The downside of this platform I'm using is very limited. So it's not like TradingView, where you can set standard deviations. You can put VWAPs at the open, the sessions, the start of day. What I use is IG. All I can do is add a VWAP. I can't customize it. So this is just a daily VWAP. So it resets itself every day, and that's it. So I don't have session VWAPs anymore. I don't have standard deviations. It's just it's just the daily VWAP, and that's it. So I'm just thinking if there's anything I should cover before I start heading off. I don't think there is. The dollar is interesting because I think it's in a position right now where we've got two different types of traders. We've got the perma bulls, which I hate to say, I'm kind of falling in the camp of with the bulls at the minute, where you look at this and you just say, I really don't think this is going to continue lower. But the problem is, I don't really have anything to justify that with other than just looking at the cycles of the dollar and the price action. Fundamentally, it does seem like we are going lower to the next key level, which at this point would be around 95. That wouldn't surprise me. It wouldn't bother me, but I don't want that to happen because I like buying the dollar. My trading is very simple when the dollar's going up. Does that make sense? I think everyone's strategy, or everyone has a strategy where when something is working, in my case, it's when the dollar is bullish. It just makes everything easier. For some people, that might be gold. It might be the S&P for other people. What platform am I using? It doesn't look like trade. It's not TradingView. It's IG's spread betting platform. So spread betting in the UK is tax-free. So that's why I use this. I did used to use TradingView up until like the end of last year, but to be honest, I'm not going to pay for it because I don't need it. I can do everything I need on here. And my trading, if you are a very technical trader and you need to annotate and really dissect candlesticks, then this is not what you want. But for a trader like me, where it's more fundamental and maybe like 10, 15% technical, and all I want to do is draw up some fibs and support and resistance, is good enough. But yeah, the tools are very limited on this. But again, for me, that's fine. Right, so let's have another look. So New Zealand Swiss is bullish. To be honest, New Zealand Swiss might be a good long position for me just to hedge off. That would also help me trade out of my pound Swiss short, which would be quite nice. Euro pound, actually, I got stopped out on Euro pound earlier this week. I think it might have been yesterday, actually. So here, let me show you what it was. Oh, this is a weekly, that's why. So daily, yeah, here you go. So I actually, to be honest, it might be a good position to get back in actually at the moment. Interesting. I'm not going to buy it right now, but if I was, which I might do, I'm going to have a bit more of a look after stream. It'd be something like this. So I'd be looking to buy off a 200 moving average on a discount and look for obviously price to come higher back to the previous high. The fundamentals are still there. I'm still very bearish on the UK economy. So for me, it's still a completely valid trade. So what I did was buy, I bought right here on the retest of this level on the 50% retracement. So initially it went quite well, and then it just melted sort of during the Christmas New Year period, and I was stopped out right here, which seems to actually been not a great place to put a stop, but there you go. Aussie CAD. Do we have Aussie CAD here? Is there anything fundamentally? Let's see. Yes, -5. I wouldn't want to be selling Aussie CAD, to be honest with you. Let's just check the interest rate projections. Again, this has all moved around over Christmas, so it just takes me a minute to remember where or figure out where everything's gone. Is it data scanners? No. Where's the interest rates gone? Maybe I'm being stupid. Anyway, we're not going to stick around on that one. Aussie CAD, let's open the chart and have a look. So I don't think I would want to be shorting because I'm quite bullish on Australia at the moment. Their central bank seems relatively stable, possibly even hawkish with the higher inflation print that we did see. So I actually would quite like to be a buyer at some point. Now, whether I will or not is a different question, because one of my personal rules is that if I have an idea and the edge finder has an opposite idea, like right now I said I want to buy, the edge finder is giving me a short reading or a bearish reading, I don't want to trade that. I don't want to take either position, because if I take my position, if I buy, I'm then going to be sat here saying, oh, maybe I should have been a seller. Maybe the edge finder is right. But then if I sell, then I'm going to be like, oh, but I don't really feel comfortable in this position because I don't agree with it. Do you know what I mean? So it just makes everything easier to just not do either. However, I think from a technical view, I would be willing to just do this. So it would just be, we've had the break. I'd be looking for just this retest. So we've obviously got this level of structure, break, look for the retest, entry on the retest, continue higher. I think that's the most simple way to go about it. We also do have the moving averages in a bullish trend as well. So there you go. James, what is your thoughts on options? I'm going to be honest with you, my friend. Options and futures, everything that's outside of what I actually do, I am completely clueless on. I don't understand options. I really wish I did. I think if I could go back in time and redo my learning process for trading, I would have looked more into options, because at the minute, or the way I sort of went down that trading path, it was very rooted in just CFD trading. And now that is basically my career. So it's very difficult to find the time to dedicate to learning a whole new trading approach. But the reason I say I wish I did learn them is because they are an extremely good tool for not just increasing returns. So if you look at someone like me, compare it to someone that trades options, the percentage return quite often is massively in favor of the options trader. So I could be very happy with, 25, 30, 40% return in a year. Whereas with an options trade, you could make 40% in 1 or 2 positions. I think, again, I'm not overly knowledgeable, but that's just from what I understand and what I've heard. So yeah, if you are wanting to learn options, I would say it's probably a good idea, but again, I don't know enough about it to really give you any guidance. Do I trade prop firm accounts? No, I do not. I am fully personal funded, or privately funded, I should say. Option seems like it's a big money maker. Yes, it absolutely is. Anyway, ladies and gentlemen, that is it for me. So as Alan said, I did make a YouTube video. It was published yesterday. It's about an hour long. And I don't normally do like much self-promotion on here, but it's an hour long. It's a very good video, if I do say so for myself. So I basically break down the typical retail trader's route to learning, going over, the normal way that they go and the mistakes they make, talk about my journey and sort of a bit more about me and how I became who I am in terms of a trader. Like what did I do to learn economics and not fall into the ICT category of traders. So if anyone is here that's learning and is interested in sort of how to progress in their trading journey and career, I would suggest going and giving that a watch. But if not, that's cool. Guys, have a good day and best of luck in the markets. Hope you all make lots and lots of money. I'll see you all tomorrow and thank you for watching.
Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing, up to 90%, and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show.
Hello everyone, welcome to my segment of the stream. I hope everyone is doing well. So, developments in the markets. I think we have Jolts right now. Let's see. Let me take a look at my news calendar. Jolts, yeah, in 23 seconds. So, pretty important number. Let's look at the DXY on the 1 minute, of course. So, what am I expecting? I'm actually expecting, did it come out? I'm actually expecting them to come out lower than the forecast. So I did some reading, did some research. Last 2 prints for the Jolts job openings were hotter than expected. Usually, Jolts mean revert. What does that mean? If you get hot prints, if you get 2 hot prints in a row, usually the next print is cold. So it's under the forecast, lower than the forecast. So it's still pending. Let's check it out. Whoa, actually, DXY flying higher on this news. So let's see. Still pending on the Forex calendar, but DXY definitely bullish so far. Okay, we got the Jolts. Whoa, so definitely a mean reversion event. Definitely a mean reversion event. Look at the forecast, look at the actual number. Kind of makes sense now with what I've been researching. Let's see USD JPY. The JPY, unfortunately, I did not place any trades on this. But for some reason, I mean, the dollar should weaken on this number, if I'm being honest. Yeah, so it came out much lower than the forecast. Actual greater than the forecast is good for the currency, which should mean that the dollar should lose value, which did not really happen. So pretty interesting stuff so far. DXY now shooting higher. Let's see the daily chart. How does that look? Okay, no massive movement on the daily, but definitely the 1 minute. So why should this be bearish for the USD? Why is the actual number greater than the forecast bullish, but actual number lower than the forecast? Why is it bearish for the currency? It is because of rate cuts. So it is because you need to look at how can you save the employment market? How can you save the Jolts job openings, let's say? Well, you can cut interest rates. Cutting interest rates is bearish for the US dollar. So far we have, let's see, Fed Watch tool, we have priced in 2 rate cuts. But maybe if the jobs market keeps on deteriorating, so keeps on getting worse and worse, and the NFP comes out lower than expected, that should mean more rate cuts in 2026. So far we have 2 rate cuts priced in. So from 350 to 300, 2 rate cuts of 25 basis points. Yeah, looks like the dollar is gaining value on top of this news. That's not usually how this should work. So it's a little bit strange, but that's what's happening. The markets don't have to follow a specific rule book when it comes to movement. It's all about the probabilities. Most of the time, if the jolts come out lower than the forecast, the dollar will drop, meaning the dollar will lose value. My sort of idea from my research, and the idea of the writer of the research, which is Brent Donnelly, was to sell the UJ or sell UJ before jolts, just kind of a quick scalp, let's say on the 5 minute or the 1 minute. So sell UJ before the jolts would have been a big loss, or would have been a loss, not a big loss, but definitely a loss, which is weird because the premises was correct. The premises was these jolts numbers will come out lower than the forecast. You can do some research on this. So what is the edge behind it? If you get 2 hot prints of jolts, the next print is usually under the forecast because jolts tend to mean revert. What does that mean? Well, you get 2 hot prints and then you get a sort of a mean reversion, okay? So the jolts move like this, from the bottom to the top and from the top to the bottom, from extremes. So the BLS, or the guys doing the actual work here, they don't do such a good job. So they could be a bit better, but hey, the worse job that they do, or the worse that their forecast is, the more opportunity is there for us as traders, because the markets usually price in the forecast, right? So if the number comes out the same as the forecast, that means no movement in the markets. But if the number comes out lower or higher than the forecast, that means movement. That means we can possibly exploit a trade. By the way, I'll be doing a DNA funded account giveaway. I have my reminder right here. Let me just move it for tomorrow. So I'll be doing a DNA funded account giveaway. It's gonna be a 25K phase 1 account in the next 10 minutes. So stay online, because in the next 10 minutes, I'll give you guys a code for a free DNA funded account. And I have a lot more. So we have, I think, what is it, around 13 codes? Yeah, 13 accounts to give away in the next let's say 1 to 2 months, or maybe 1 month. So let's do 1 month, 13 accounts on these live streams. So on my segment, sometime in the segment, usually around the middle, I'll give out a free account. So looking at some other stuff for today. Back to the daily. Silver back at break even for me. Red on the day, which is good to see. I have a short position. How's gold doing? Let's take a look. Gold is pulling back a little bit, but silver, again, I'm still holding my position. I'm still bearish. I still think this has gone parabolic. I still think this has overshot. And in January, there should be a break-even or negative month for silver because we had such a rock star year in 2025. Usually when silver has a rock star year, the next year is break-even or negative, especially January. Okay, you have a lot of big funds rebalancing their portfolios, and if they started the year of 2025 with, let's say, 4.5% in silver, well, at the end of 2025, that 4.5% grew to, let's say, 9%. So now silver takes up a lot of their portfolio. To get back to 4.5%, they need to sell a bunch of silver. And by my forecasts and research, it should happen in January of 2026. So that's the play. That's the play here. Stop loss is above the all-time highs. Take profit is around the 60.1 mark, which I think we can definitely hit. I mean, just look at if you squeeze out the trend a bit, this could definitely happen. This sort of a drop, this sort of a pullback. So that's something that I'm closely watching and looking to execute. Okay. And I have, of course, two positions open. I have NZD/USD buy setup, which is doing okay, like nothing to write home about, but it's not bad. And the Aussie dollar trade, which is doing pretty well. So Aussie dollar doing pretty nicely at the moment. Looks pretty healthy. Aussie is super strong. Love the Aussie. The RBA is supposed to be hawkish, which is nice. And also, big banks love the Aussie as well. They cited, most big banks, Barclays, JP Morgan, Citibank, they cited the Aussie as their top currency going into 2026. You know what that means? That means they're going to buy the crap out of the Aussie against the dollar, let's say. Something they hate is the pound. So they are very, very bearish on the pound. We can check out GBP, JPY. Or do we have JXY? No. GBP, JPY. Let's take a look how the pound is doing. Pound is pretty bullish. Pound is getting bid. So it looks like the big banks are wrong on this one in terms of the pound. Pound Aussie though, Pound Aussie should be getting some bearish price action. Yeah, Pound Aussie getting some bearish movement, although we just cannot seem to go below the support level. We cannot seem to break lower from this support level. Hopefully it happens, because I think a Pound Aussie is a very, very good play. What does the Edge Finder say? Let's take a look. Let's see, Edge Finder. Top setups, of course. GBP AUD. Bearish reading, so that's okay. That's nice. Most of the stuff is red. I just want to see it break lower. So I want to see the technical analysis work, and I want to see us break lower. Break the support level, then it's game on. Most likely, I will look for a short setup in that case. So let's set an alert as well. Now, time for the DNA Fund Challenge. So let me copy it. Let's copy the code. If you're ready, or you should be ready, because it's coming right now. This is it. So this is the code. Let me just double check. Yeah, should be it. This is the code for the 25K one phase challenge. DNA funded. So 25K one phase DNA funded. Again, the fastest hands get the challenge. If you did get it, put it in the comment section so we can see who was the fastest. Okay. By the way, if you're looking to get funded with DNA, if you're looking to buy a funded challenge, such as this one, this is my personal one. It is a funded account, which I passed on these live streams. I have been showing my progress every single day. Current equity not looking so great. I'm in drawdown, but trying to climb out of it. So if you're looking to get funded, we have a discount code for you, A1 Live. So A1 Live gets you 25% off any DNA funded challenge. So again, DNA funded, great prop firm, great price with our discount code, ran by professionals. There's a big broker behind it, so I highly recommend checking them out. Yeah, if you want updates, so this was phase one of my, no, this was phase one, made 10%, phase two, made 5%, and now funded stage, unfortunately got into some drawdown, and I must climb out of it. That is the goal with this challenge. The goal is, of course, to get a payout. Now, time for the comments. So let's remove this. Let's see the comments. Let's see. Did anyone get the code? Let's see. I can't really see if anyone did get it, but maybe we should wait for more comments. So going back to the beginning of the stream, let's see the comments. Joshua, hello. Aizen, hello. Cycling Club, welcome. Max, welcome to the stream. Shooting because ISM services PMIs. Okay, ISM services, I missed that. I was mainly focusing on the Jolts job openings, but the ISM actually beat the forecast. Yeah, big beat. Actual number greater than the forecast is good for the currency. Although from my research, the Jolts are a bigger mover of price rather than the ISM. So Jolts tend to move the price more compared to the ISM. Let's see what's happening on the DXY right now. So 1 minute. Yes, a definite move up, but not sustained. A sustained move would be consecutive blue candles. So this does not seem to be a huge reaction. But Max, you're definitely right. You're definitely right. And Alan as well, that ISM was the market mover in this scenario. From my research, I thought that the Jolts were going to move the markets, not ISM. Okay. Gold is in profit. Been waiting for you to see your thoughts after the news. Max says, I promise I don't participate to the giveaway. Already won twice. Marco always stacked with the DNA accounts. Yeah, I have 12 more accounts. So make sure you guys join in on the streams, because every single day I'll be giving out one account. So one account per stream. No repeated winners this time. Well, the fastest hands get the accounts. Those are the rules. Let's see. Pound Aussie, Euro Aussie closely together. Yeah, I've been definitely watching the Pound Aussie. Euro Aussie, not so much. I have a much clearer picture on the pound, especially if you jump on to the catching a bid. So DXY starting to catch a bid, especially if you're looking at the Edge Finder and you look at, where is it? So UK, here it is. So look at this. Most of the data that's coming out in the UK is bearish. Very, very bad for the pound. Very, very bad for the pound. That's why I love the Pound Aussie. Pound Aussie not on the 1 minute, but on the daily, looks very, very good. Not in terms of technicals, but in terms of fundamentals. Again, for technicals, for me to sell this, I need a break and retest. So a break of support, retest of support, and then it's game on. Then it's game on for me. Silver getting crushed even further. Yeah, just getting crushed, which is good for my position. What happened to ChatGPT? This challenge is purely traded with ChatGPT. So only this challenge. Rest of my accounts are traded by me. But this particular challenge purely traded by ChatGPT trade signals. So the last trades that ChatGPT took were a buy on the SPX and a sell on EJ. So it's still happening. It's still going on. And I'm going to continue executing the signals. Need to be on the checkout page to redeem. Yeah, that's the fastest way to go. It says the code is redeemed. What happens if one person wins everything and sells the accounts after? Well, I'm not sure that that's going to happen. We did giveaways before, and in all cases, the accounts actually got used by the person that got the code. So I don't think that's going to happen. But if it happens, hey, you know, it's their account. It's like when you have car giveaways on YouTube. Like the person that gets the car, he can sell it. He can do pretty much anything that they want with the car. It's the same thing with the challenge. Although I don't think anyone will be reselling a challenge. Best to be on the checkout page. So somewhere in the middle of my segment, I'll put out the code, and you just have a window open on the checkout page of DNA. Input the code. So fastest hands, fastest internet as well. By the way, I'm in Europe, so maybe if you're in Europe, you get the signal the fastest. I'm not sure if that's how it works because it goes through StreamYard, but maybe. Okay, how will the Edge Finder giveaway work? Hope dollar index will go down. I got a trade on euro dollar. Mystery operator, James. Edge Finder giveaway soon. Okay, continuing with the analysis. Silver down. NZD/USD down. Aussie dollar pulling back. DXY going higher. I'm guessing on this ISM. Has to be. So, but it's a conflicting signal. So ISM crushed for the forecast. Jolts definitely much lower than the forecast. So a bit of a mixed signal. Looks like the market is taking it as bullish dollar. Bearish S&P. NASDAQ is flat. Dow Jones bearish, but overall looking pretty healthy, if I do say so myself. Very clean formation. So looks pretty nice right there. Yeah, Dow looks pretty nice. Russell looks a bit flat. Starting to look a bit flat. The DAX keeps on crushing higher. Not sure why, but it looks extremely bullish. What does the Edge Finder say? I don't think we have a bullish reading just yet on the DAX. Me personally, I'm not touching the DAX right now. DAX neutral reading. Another reason for me to be patient. But the DAX does seem, just looking at the technical analysis, the DAX seems very, very bullish. Looks very, very good at this point. Actually, it broke out of a resistance level. We had some pretty nasty resistance. DAX was super flat from, I would say, from May 25 up until the rest of 25. It was flat. Finally got a breakout and continuing higher. Again, if the Edge Finder flips bullish, we get a bullish reading. If we get a pullback to the 20 MA, I might take a stab long on the DAX, although I already sucked like 2 losses in this chop. So I'm not super happy to trade the DAX. Nikkei starting to flatten out a bit. Gold starting to pull back with silver. So yes, gold. Damn, Ali's side, you just got blocked. Congratulations. But gold, silver move in tandem. A lot of correlation between them. Although I'm looking for buy setups on gold, I do still have a sell setup on silver. That's because silver just looks so juicy to try and take a sell stab, a sell position at it. So as far as gold goes, Edge Finder, let's take a look. Whoop. Let's see, Edge Finder. So gold. Bullish reading on gold right now. That's pretty nice. What about silver? Neutral reading so far. So we flipped from bullish to neutral, but gold is still bullish. So if gold pulls back to the 20 MA, I think it's a good buy setup. I think it's a pretty good buy setup. So I'm considering buy setups on gold. We do have the Edge Finder confluence. Now I'm looking at the 20 MA and at this previous all-time high, which does act as a good level of for a break and retest, good level of support. So resistance becomes support and vice versa. Platinum pulling back aggressively, copper pulling back as well, Bitcoin looks bearish, definitely. I mean, red on the day. Ethereum, red on the day as well. As far as crypto goes, I'm not interested. So as far as crypto goes, I'm waiting for a breakout above 100K. Unless we can climb back above 100K, I shall be patient. So I don't think there's a lot of activity or a lot of opportunity for bulls, which I want to mainly be a bull on Bitcoin. I don't really want to get into sell setups. I mean, I may take a sell setup if everything looks great, if there's a lot of confluences, but I would much prefer to buy. And for me to buy, I need to see this go back above 100K. So that's my goal for Bitcoin. As far as Ethereum goes, looking at Bitcoin first. So unless Bitcoin can go back above 100K, Ethereum, in my opinion, is just going to stay flat. There's a lot of correlation. It's a pretty similar case to gold and silver. Gold is Bitcoin, silver is Ethereum. So that's kind of what I'm thinking of crypto right now. It's on the back burner, so I'm patient on crypto. US oil moving lower. So looks like the overall impact of the US versus Venezuela scenario is not really developing much, or it doesn't really have a huge impact on the prices of oil. Let's see, when the market opened, I mean, the Monday open was there. We are now bearish, if anything. So it's actually a bearish reaction on the prices of oil. But is it a massive move? Is the candle big as this one, as this one, as this one, or this one, or this one, or this one? Absolutely not. So the movement is very limited, very, very limited. The conflict does not seem to be heating up. They kidnapped the Maduro, I think that's the name, Maduro. So they did sort of an NLO abduction. That's about it. Took control of Venezuela, took control of the oil fields. So yeah, gonna have to monitor and see how things develop. Right now, the price is pretty quiet on that front. And I think that also may be the reason why gold and silver are down on the day. I mean, you had sort of a risk-off scenario over the weekend. You had some drama. You had some uncertainty. Of course, gold and silver are going to go up because it's a risk-off event. But maybe the market realized it's not such a risk-off event. It's not such a massive uncertainty. So maybe we can back off buying silver. We can back off buying gold for a bit. That's at least how I see the situation. Maybe the whole US-Venezuela conflict is not going to be such a huge impact on the markets. Let's see. Comments. Max says, Marco, maybe as I'm in Europe too. Yes, so maybe you got the prior two accounts because you have the fastest connection to me. But I don't think that's how it works, because it all goes through StreamYard, which has sort of the same connection to every single place. And there's a delay between my feed and the actual stream. I think there's a 20-second delay, which gives me enough time to send all of the codes to Max first. That's why he gets all of them. Just kidding, by the way. Do you live off of trading? No, I don't. I have multiple income streams. Do I want to live off of trading? To be honest, for my psychology, I don't think that would be the right approach. My main goal is to have multiple income streams to cover my basic expenses so that I don't rely on trading to cover my bills. If you look at the top traders, top prop firms in the world, S&P Capital, those guys have a monthly salary. So even if they bomb for the whole month, even if something happens and they lose 15% in a month, they still get a monthly salary to get them through the tough month to pay their bills. So if you want to be successful, the best way to become successful is to have a main income that covers your basic expenses and then trade on the side. Anything that you make in trading either goes in your account or goes into prop firms, or you get some extra walking around money. Why the US strength? Well, looks like the US strength is there because of the, just a second, just because of the ISM services PMIs. Euro dollar, COTS, commercials are highest net long on DXY. Does silver get crashed from the indexes rebalancing? Yeah, the silver should crash, or silver should crash the most from the indexers rebalancing. So you have to look at the big funds. So let's say there was 100 billion in those funds at the beginning of 2025, and they were holding 4.5 billion of silver. Well, that 4.5 billion grew to around, I would say, maybe even 10 billion of silver at the end of 2025. So guess what? They went from 4.5 to 10. Now silver represents 10% of their overall portfolio. So what do they need to do? They need to sell 5.5 billion of silver to get back to 4.5. So they need to rebalance their index, their portfolio, so that silver does not represent a huge chunk. Hopefully that makes sense. It's not that hard, but that's the bearish case for silver. Usually they do the rebalancing in January of the new year. So this month. When these guys are short on a market, it doesn't go up no matter what. If ball-out has something to do with it, yeah, ball-out, why is the DXY not going to 95? What are you doing? So please, ball-out, do your thing, make this thing drop, because I have mostly dollar bear positions. Yeah, I have the dollar bear. No, actually, sorry, this one benefits from the dollar gaining value because it's quoted against the US dollar. But NZD-USD, AUD-USD benefit from the dollar losing value. CAD, let's see. Also, let me check if someone is behind my segment. Nope, I'm the last one. So CAD, we had some CAD news, didn't we? CAD news is up and coming. As far as I can tell, the employment and the unemployment rate is coming on Friday. So am I missing something? As far as the CAD goes, this is what I'm watching for this week. Let me see. USD CAD. We got something. PMI, okay. Much better than the forecast. USD appreciating against the CAD. Okay. But to be honest, I'm focusing on the employment data. I think the employment data will be the key thing for Canada, for the CAD. So we can talk about this on Friday. The last thing for today is Euro USD. I saw quite a lot of euro dollar comments. So let's take a look. What is this? This is a position I had, so let's remove that. Euro dollar. Edge Finder. Let's take a look. Neutral reading, not great. On the euro, I'm a bit uncertain. For the dollar, I'm slightly bearish. So that's kind of a mixed signal for me. Again, not sure on the euro. Price action looks a bit flat. Technical analysis looks flat. We seem to be stuck in a range. So, yeah, not for me. Not my favorite thing in the world. I would much rather, at this moment, I would focus on the Aussie. Aussie dollar looks great. Pound Aussie to sell looks interesting. Let's get a break and retest. Let's get the break of support. Silver sell still looks interesting in my opinion. What else? Gold looking for possible buys around the 20 MA. And that's about it at this moment. Yeah, UJ. USD JPY. USD JPY, I'm looking for a break above 158, and then I'm going to try and execute a sell position counting on the BOJ intervention. I've talked about this for days now, so a nice sell limit above this area, I think it's a good trade to have. That's about it from me. Thank you very much for watching. I'll be giving out DNA Fund accounts for the next 3 or 12 live streams. Make sure you participate. See you guys tomorrow, and I wish you all the best in the markets. Goodbye.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.